The PEG ratio is a financial metric used to assess the relative value of a company's stock. It takes into account a company's growth rate and earnings, providing investors with a more comprehensive picture of a company's valuation than other traditional measures like the price-to-earnings ratio. In this video, we will define the PEG ratio and discuss its strengths and weaknesses as a valuation metric. What is the PEG ratio? The PEG ratio is the price-to-earnings (PE) ratio of a company divided by its earnings growth rate. The idea behind this ratio is to determine the stock's intrinsic value by accounting for the company's growth prospects. The ratio shows the expected value of a company's stock relative to its expected earnings growth. One of the strengths of the PEG ratio is that it takes into account a company's growth prospects, providing a more complete picture of the company's valuation. It helps investors determine if a stock is overvalued or undervalued based on its potential for future earnings growth. Another strength of the PEG ratio is that it allows for comparisons across industries. Because the ratio is based on a company's earnings growth rate, it helps investors compare companies in different industries with different levels of earnings. One of the weaknesses of the PEG ratio is that it relies on the accuracy of earnings forecasts. If the forecasted earnings growth rate is incorrect, it can significantly impact the PEG ratio and mislead investors. Another weakness of the PEG ratio is that it does not take into account other factors that can impact a company's valuation, such as debt levels, cash flow, and market conditions. Therefore, it should not be the sole factor used to make investment decisions. The PEG ratio is a valuable financial metric that helps investors assess a company's valuation by taking into account its growth prospects. While it has its strengths and weaknesses, it provides a more comprehensive view of a company's value than traditional metrics like the PE ratio. However, investors should always use the PEG ratio in conjunction with other financial metrics and analysis to make informed investment decisions.